have to go down now to the 4 hour. So we're simply going to get the same exact market move from the daily time frame right here. I'm going to put it right back into place just so we can pretty much confirm that all we are doing is just zooming in. So we all agree that this is the market structure there. Now we go down to the 4 hours. So we already started from the top and we're working our way down. Now, this is currently how this looks on the 4 hour time frame. So for example's purposes, I'm going to simply start it off from this point right here, just because there's a lot of market structure and I can pretty much be all night identifying every single one of these structure points. So just gonna follow every single higher low and higher high that this market created along the way of it heading to the upside, and every lower low and lower high that this market created heading to the downside. So as you guys can see, it might look a little bit messy, but once I move it to the outside, you can see very clearly right here that came out from that 4 hour section, and that this right here is the original daily structure move. So we're making this very, very simple, very, very straightforward. This is what the top-down analysis looks like on the weekly time frame. This is what the top-down analysis looks like on the daily time frame. And now this is what the top-down analysis looks like on the 4 hour time frame. Everything you're seeing here is the exact same market. As you can tell, it's been GBP USD the whole entire way. The only thing that has changed is that we have gotten in closer and closer and closer to identify what makes more sense. Does it make more sense to buy, or does it make more sense to sell? Because at the end of the day, the market's going to do two things. It's either going to go up or it's going to go down. We're simply trying to find an edge on where it makes the most sense that the market's going to go. And as of right now, that we've identified the weekly time frame as bullish, and we've identified the daily time frame as bearish, we can confirm that the 4 hour time frame is also bearish. Why? Maybe it's a beginner trader, you can identify this as bullish, but it's actually the same exact concept as the daily time frame. This market was creating beautiful higher lows and higher highs heading to the upside, but then this was the last higher low, broke under that structure level, making the 4 hour time frame now bearish. So as you can see, this is the move that fits perfectly inside here, and this is the move that perfectly fits inside of this market structure right here. So every single time frame that we go down, we just get more in detail on what the hell the market is doing exactly. This way we can find an edge on what decision should we take. So based off of this right here, off of creating a top-down analysis, my bias is already making more sense to enter a sell than to enter a buy. Why? Because as I started from the top and I started working my way down with the top-down analysis, it's clearly that two time frames are going bearish versus one time frame is bullish. So as of right now, that is literally only the first half of top-down analysis, which is going to be the weekly, the daily, and the 4 hour. This is to simply understand the trend of the market, where is the majority of the time frames headed, so we can pretty much create an edge on that direction and take the trade that way. Now, this is what I do personally for myself to catch day trades, intraday trades, and also swing trades. Some of you scalpers out there, or people that are taking even, trades on the lower time frames, you guys don't have to start on the weekly. You guys can pretty much go daily, 4 hour, 2 hour, and then you look for your entries from the lower time frames down. I personally like the weekly, the daily, and the 4 hour, simply because the higher time frames are more respected than the lower time frames. Why? Well, it's because it takes the weekly a lot more time to create a structure point than it does on the 1 hour. In order for the 1 hour to create a structure point, it can literally happen within 4 to 5 hours, which happens very often. But on the weekly time frame, for it to create a structure point, it takes about 4 to 5 weeks to create the same structure point. So what do you think is going to have a stronger basis of holding price? Something that happens every 4 or 5 hours, that can happen tens of times throughout the day? Or do you think something that happens once every month to month and a half? It's pretty logical in my opinion. That's why I stick to the stronger, because at the end of the day, I want to put my money behind something that is going to give me more odds of making me money versus not. Just doesn't make sense in my mind. So after we understand that this is the top-down analysis for the trend of the markets, now we're going to go through the top-down analysis of the entry part, which is very key because it's where a lot of traders pretty much just want to jump the gun and go straight into entering the market. But they got to understand that before entering the market, they have to properly do a top-down analysis to actually be able to execute a trade. So now that we understand that two of these time frames are bearish, I'm just going to remove the one that's bullish because we're not interested in buying at all, and we should not be interested in buying at all. We don't want to take a counter trend trade. Makes no sense. It's a high risk trade. So we're going to only look for reasons to sell. So now that we have our two time frames that are going to confirm to us that this is bearish, we're going to now look for entries on the 2 hour, the 1 hour, the 30-minute, and the 50-minute. So what exactly are we looking for on these time frames in order to take the trade? Now, this is literally where you're about to have a aha moment. So you're literally about to tell yourself, wow, I cannot believe that I have not been seeing this so, it's literally like been right in front of your face the whole entire time. And that is, if we are selling, why don't we continue the selling top-down analysis market structure on the entry points? What does that mean? Let me show you. So if we are interested in selling this market right here, we know that this is what it looks like from the daily to the 4 hour here. Now, this exact same market structure, let's say hypothetically on the 30 minutes, just to show you guys very simply with the same exact market that we're currently using, you can see that on the 30-minute, it's going to look very, very different. Let me just bring this here, put it back on where the market is. So we know that we're exactly on the same market that we drew up in this section right here. Now this is just back on this area. So let's look at it on the 30 minutes. So if we go on the 30-minute time frame, you can see how we're just gonna structure up this last section here. You can see how it consists of a lot more structure points, literally creating a bunch of little higher lows and higher highs throughout the whole entire way. And this is obviously happening a lot faster than the 4 hour time frame, than the daily time frame, so on and so forth. So if you notice right here, this market on the 30-minute time frame looks very different than you would want it to. Now, what do I mean by that? It's very confusing. Well, don't worry, it's about to make a lot of sense right now. So I'm just pretty much dragging this all the way back to our 4 hour section, which is going to be right around over here. So what I have done right here is I've literally brought in this zoomed in section of the entry area of GBP USD on the 30 minutes from the 4 hours. So this is the 4 hour time frame. Now this is what it looks like on the 30-minute time frame. So I've obviously only focused on this section here because if I were to pretty much go back, all this would look very rubbish. It would have a lot of different structure points and doesn't matter to what we're about to do right now. So if this is what the 4 hour time frame looks like, and we've understood that this time frame is bearish, just gonna put it here so it's very visual. And this is what the 30-minute time frame looks like. What is this 30-minute time frame doing right now? Are we actively bullish or are we actively bearish? Well, once again, probably to a beginner trader, this time frame might be bearish, but they're actually wrong. This time frame is bullish. This market was creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and we have now shifted to the upside, making this 30-minute time frame bullish. So now that this 30-minute time frame is bullish, well, doesn't mean that it's the right time to enter this trade because we are looking to sell, and we can only sell when we have a bearish market. If we have a lower time frame, which is a time frame that we're going to enter, that is against our overall top-down analysis trend, it simply does not make sense to enter the trade. The lower time frames have not shifted the structure yet, making it not logical to enter the trade. So this right here would be a perfect example of a loss that a trader would take, or a position that I personally would avoid. So to make this very simple and very straight to the point, it simply comes down to this. If this is going to be, let's say, the 4 hour time frame, and this is what the market would look like on the 4 hour, and if I were to divide it from 4 hour to then 30 minutes, this is what it would look like on the 30 minute. Let me just make it a very clear cut through version of what it could look like following the same path. This is simply going from the 4 hour to the 30 minute.